Okay, what's going on, traders? What's up, tycoons? Super excited for today's video, bringing you another TLT update. Okay, as always, we're looking at the daily chart on these time frames, and today we're actually going to look at TLT. We're going to look at HYG, TNX, some other bond related things, as well as giving an update on the stock market, the S&P 500. We'll take a look at the volatility index, the VIX, and skew as well. Also some other metrics that I use to really gauge market sentiment. And then what we'll see is that we're actually going to do an update on SLV, okay, and take a look at silver. Someone actually requested that I take a look at silver in these, market update videos, and I do viewer requests every single week. So, the channel is highly oriented around the viewers and what you guys want to see. So if there's anything you want me to include in these market update videos, feel free to comment down below. If you're new to the channel, make sure you subscribe. And if this looks very complicated and it looks, super complex, you're actually going to learn a lot. It's very simple. I'm going to break it down for you guys very simply. So make sure to stay tuned. Now, before we dive into the video, I do want to mention that, I put out lots and lots of great data, right? Not just charts all the time, but actual data, related to a lot of the things that we're looking at. So if you haven't watched this video here, all right, yikes, TLT, S&P 500 doomed, all right, go ahead and check that video out. There's a lot of really good important data in there that you should check out, and be aware of if you're not already. So we'll go ahead and jump into it. And what we're doing on TLT is we're tracking this 5-wave move down, right? And so that's going to be the orange lines here. So we have 1, 2, 3, 4, 5. Okay, your wave 1 and your wave 3 and your wave 5, those are going to be 5-wave impulsive moves. And then your wave 2 and your wave 4, those are going to be ABC corrections. Okay, so we'll break it down real quick just so you guys can see. Here's our first wave down. And as you can see, it was a 5-wave move down. We have 1 down, 2 up, 3 down, 4 up, 5 down. Then that completes. And our wave 2 is that ABC correction. And we go ahead and get that there. Now, there's 3 levels that we really pay attention to: the 61.8%, 50%, and 38.2% retracement levels, right? So that's using the fib tool over here. These are the 3 most common and really most important retracement levels that you can pay attention to. It lets you know and identify if you're in a trend continuation or a reversal, right? So if we take a look really for TLT for the whole year, we've been in a downtrend, right? It's no secret there. So we're coming down and then we retrace to our retracement levels and we continue that downtrend, right? At any given point, if we break through these levels, and that's when we can spot a reversal. And we see that really just continues and continues, right? We establish a new high up here, right? We come down, we retrace to our retracement levels, and then we push lower. Even here, we come down, we retrace up to our retracement levels, and then we push down lower. So that's been happening over and over again. And on our ABC corrections, that's really where we're paying attention to and using a lot of caution, right? Is because this is some kind of like make or break levels. Okay, so we went over wave 1 and 2, and then here's wave 3. We get another 5-wave impulsive move to the downside. And then recently, since I've been posting these TLT videos, we were looking for the ABC correction wave up, and we actually got a perfect rejection at our 61.8% retracement level. If we go ahead and zoom in now, we can see a little bit more clearly. All right, we got a very clean rejection right here at the 109.72. I've been telling people to watch out for that level. And the main thing we were looking at for this downtrend was the MACD sell signal right here. And the sell signal is going to be when the red line crosses below this white line right here. All right, each time that has been happening, there's been a significant sell-off in the market. Okay, so right here we got the MACD crossover. And what date was this on? This was on December 16th. Okay, so December 16th, we got our MACD crossover and we've dropped very significantly since then. We actually just broke our 102.94 retracement level. Okay, and I mentioned that a half gap fill and reversal is very, very bearish. Okay, so what I mean by that is these blue boxes right here, these are all gaps. Okay, they're what's known as gaps on the daily chart. These fill about 90 to 95% of the time historically in the market. But the big question is, when are they going to fill? Not if they're going to fill, when are they going to fill? So I like to chart them up so that way they're areas of interest. And I know that, the ticker can be drawn towards these levels based on the fact that they fill, and I can pay attention and see if we're approaching them or if we're, leaving them behind, right? When we were up here, I said there's a strong possibility if we break through our 109.72 that we could try to come up and fill that gap, but we did get rejected perfectly at our 61.8, and we've been coming down And in my last video, I mentioned if we get a half gap fill right here, which is exactly what we did, we came up to the half of the gap. And then, you know what we did? We shot straight down afterwards. So it looks like we're still in our wave one down. We haven't necessarily found a bottom yet, but sometime next week or in the following week, I wouldn't be surprised if we start to find a bottom and get a slight bounce in the market to give us our wave two. Remember, we're tracking the larger wave five down, and that's going to be a five wave impulsive move to the downside. So eventually you're going to get some type of bounce. Now it would make a sense for us to get a bounce near this trend line. Okay, it would be a break and a retest. This is a trend line that we've been respecting for a very long time. If you see, it goes back all the way up here, and we keep getting rejected. We actually finally broke through it, and it would make a lot of sense for us to retest and possibly get a bounce there. So, you know, I'll be on the lookout for that. Now, back to the MACD. Okay, so the MACD right here. Remember, we were waiting on this sell signal, and I told you guys it's led to a significant drop. Over here, we got a MACD sell signal as well. And that, what date was this on? This was on um, August 10th. So August 10th, we got a very sharp drop in the market in TLT, right? And we can see it dropped significantly down 20+%. All right, over here, we get another MACD sell signal right here on June 6th on TLT. And we can see from the highs to the lows right there, that was about a 7% drop, right? Over here, we have another MACD sell signal. This is on April 6th. That's actually my birthday. So shout out my birthday. And we can see we got a very nice sell signal, and it led to a 16% drop. Over here on, what is this, March 8th, March 9th, right? We ended up getting another MACD sell signal. And we see from there to the lows, right? That was about 18%. You could even say it went down 21% plus. So, you know, that's the signal that we've been waiting on. If you've been following this channel and following the updates on this, I've been telling you guys, as soon as we get that, that's pretty much going to be our green light that TLT is going to drop. You know, up here, right up here, previously we were chopping around and it was getting close to it, but we were waiting for confirmation, right? We were really bouncing off of our main levels, 106 to 33, but eventually we got that MACD sell signal, and we've had a very significant drop since then. Okay, so right now, you know, we have overhead resistance at 102.94. That's going to be a very strong level. It's going to be a level we need to stay below if you're bearish. Okay, if you're bearish on TLT and you think it's going to go down, you need to watch that level, because back above there, there's a chance that we could push back up higher and try to fill some of these gaps up here around 106. Okay. Watch for the test of that trend line as well. That's going to be pretty important. And just keep an eye on the MACD. You want to see it trending down if you're shorting this, or if you're out of this position and you're waiting on a re-entry. You're going to want to wait for a buy signal, right? Which is going to be this red line crossing above the white line instead of this red line crossing below the white line. Okay, that was our sell signal. Now the next one we'll look at is actually going to be HYG. Okay, and this is a high yield corporate bonds ETF. And so, you know, we've been tracking this rising wedge pattern right here, indicated by these two trend lines. Price action has been squeezing, getting tight in between it. And we came down. All right, we bounced at our 50% level right here, right around 73.56. Now, these are actually the retracement support levels. Okay, so not the resistance levels that we were looking at earlier. So what this is tracking the swing low up to the swing high down here. And if we hold all three of these levels as support, there's a chance that this could push up higher. So until we break through these support levels, that's when we're going to get the move to the downside, right? And so the move to the downside, especially for this rising wedge, will take us back down here to where the pattern really started to begin. You know, that's typically how a falling wedge or a rising wedge is going to play. So you look, you know, we got a breakdown. And then I also mentioned that we were looking at a retest, right? And I said, hey, you know, right here specifically, and what day was this on? Let me see real quick the date. This was on December 21st. And so we can take a look and see that we're retesting this trend line here. And I said, this is pretty normal. You know, you're going to get a break and a retest. But if we start to trade back above this trend line, then what we would have would actually be a look below and fail, and then we'd be back inside of our range. Well, we were able to go back down afterwards. So it does look like, for the most part, there's a strong chance that this thing could be heading back down. 73.56 is the major support level. 72.82 is a major support level, and 74.30. Okay. You know, for this to go any lower and for this rising wedge to play out, all right, we have to break those three main levels of support. Again, looking at the MACD, we did get a MACD sell signal on this one as well. Okay. So, you know, things do seem a little bearish in HYG and TLT at the moment. And that's no really surprise. Now, we were tracking a larger falling wedge. Okay. So if you take a look, the falling wedge obviously is the opposite of the rising wedge, and it's actually a bullish pattern. We did get a breakout here. And this is a great example of how I mentioned a look below and fail, and then we go back into that range. Well, here we got the exact opposite. We got a look above and fail, and now we're trading back in this range. So a look above and fail is typically pretty bearish. And then, we actually set up a bearish chart pattern. We got a break and a retest instead of a look below and fail. We got a break and a retest. So there's a strong possibility we could head back down lower. All right. But we really just need to be cautious if you're trying to play HYG right now. It's holding support pretty strong. And again, until we break through those levels, there's a possibility we could be retracing to go higher. A reversal would look something like this, right, where we start to break down and then really break that 61.8% retracement level. The next one we're going to look at is TNX real quick. And TNX has actually been recovering. Okay. This is a 10-year treasury note yield. And what we're looking at here is a nice head and shoulders. Now, I did say that, this head and shoulders was most likely complete after we came down to these levels, but I was looking to see if we could actually fill the gaps down here on TNX. It doesn't look like that's going to be the case right now. Now, what I do see is our three major retracement levels. Again, these are the support levels. So when you see 38 on top, 50% in the middle, and 61.8 on the bottom, that's your retracement support levels. So there's two patterns really that we could be seeing. We could be seeing an ABC to the upside, right? If we hold all of these support levels, it would be this green line right here that we're tracking. We've come down. We're holding the 50% retrace level very well. It's at 3.43. Our major support level really above that is going to be 3.648. So it does look like we've kind of started the ABC up. All right. And we could, continue to push higher on TNX. But if we end up, breaking through these levels, it's going to look like this pink ABC right here. So we have our A wave down. We've got a B wave recovery to the upside. So TNX still has a little bit of room to push up. We could actually come up to about 3.9, maybe even 4. All right. And if we get a strong rejection there and a push down, then, there's a possibility we could be starting an ABC down to go ahead and fill these gaps down here on TNX. Now, the next one we're going to look at is SLV. As I mentioned, I had a request to start covering silver. And so what we're looking at on silver is going to be a few things, okay? So first, what I want to highlight is the MACD, all right? As we've been paying attention to my videos, looking for a MACD sell signal is pretty important to me and pretty significant. What we see is not really a strong sell signal. It has crossed below, but just barely, right? It's just barely starting. You really want to see it push lower and have like an aggressive push to the downside and create some space in between that white line and that red line. Over here, you can see previously, we did get that right here. We got a MACD crossover, and then we actually gapped up, right? And it brought the red line back above our MACD or back above our white line. Now, one thing I do want to highlight is that we have a bearish a bearish divergence. So if you're not familiar with what that is, take a look here. We have a high and then a higher high, right? So, clearly this, ticker is in an uptrend, right? Silver is in an uptrend. We have a high here, we have a higher high here. The relative strength of this should be increasing and following that, right? The relative strength index is going to measure the relative strength of a stock or a ticker or whatever it is at its current price level. Well, what we're seeing is it's actually in a downtrend, right? So this is known as a bearish divergence. It's an indicator we may see some bearish activity in the future. If we can get that MACD to really start to create some space from the white line and give us a true sell signal, then there's a possibility that we could break this rising wedge pattern that we're looking at. Okay, there's a rising wedge. I'll go ahead and zoom in a little bit more and make it kind of clearer for you guys. But we're looking at these two white trend lines, right? So we have our trend line to the top here, our trend line to the bottom here. Price action is zigzagging in between here. If we break this trend line, there's a strong possibility that, we're going to get a nice move to the downside. And there's a very, very big gap on SLV down here to about, where does it begin at? Right at 18. Okay. So currently it's at 21.85. That's almost a $4 drop on SLV that, we could potentially be seeing. Now, one thing it's doing is it's chasing its gaps up. All right. So Remember, I said they fill about 90 to 95% of the time historically. The main question is when. Look at these gaps we have here in the past. All right. These gaps, they're all the way back from earlier in the year. What time period is this? April. Okay. So these gaps are all the way back from April and they're starting to fill. Okay. We filled the first gap up. All right, right here. We just recently filled it up actually. And this was our first big gap up we had to fill. There is a chance that we could extend and keep in this rising wedge pattern and head back up to fill this gap potentially, right? And this gap is going to be up here at 2306, and we have another gap up at 2381. There is a possibility that SLV, could continue bullishness and continue to rise up to these levels, but you need to be cautious if you're trying to be bullish on SLV because the MACD is starting to, show us glimpses of a sell signal and we have bearish divergence in SLV. So this isn't really a time that I would go long or short. I would wait for things to play out some more and really look for a much better signal or a better entry. Now, to the left in yellow, we have our major retracement resistance levels. Okay. You're familiar with these, the 61.8, the 50%, and the 38.2. And we're tracking, this entire move to the downside. Let me zoom out a little bit, right? And what we're doing is we're tracking that entire move to the downside. Boom, big move to the downside. We've come up, we've actually broken past our three major retracement levels. And in this ticker, I'm actually highlighting the 78.6 because this is a very common fake out level, right? It's not always guaranteed, but there's a lot of times when things will push up and actually go to the 78.6 and then get that reversal, right? Or that trend continuation. In this case, it would be a downtrend continuation. And we're very, very close to testing those levels. All right. Those levels is going to be at 2246. So I would pay a lot of attention to 2246 as a resistance level because there is many times that, market makers will fake people out, who are using the strategy of looking at the 50, the 38.2, 61.8 retracement levels. Just even recently this week in the Discord, we made a trade by entering off of the 78.6 retracement level, and it was a very nice trade, right? So I just want to throw that out there that this is going to be a very important level that I'm watching. Now, there's two wave patterns that really I'm tracking on SLV right now. It's going to be a 5-wave move to the upside to take us to fill that final gap up. All right. So we have 1, 2, 3. If we pull back, all right, these are our three major retracement levels: 21.05, 20.66, and 20.27. We've got a nice 3-wave move to the upside here. And if we pull back and do break this trend line, we can still be bullish, right? If we hold those three levels of support and push up higher, then there's a strong possibility that we could actually fill those gaps to the upside. Now, if we come down and we break these levels, then the bearish scenario would be an ABC down. Okay. And so we would come down, test one of our major three retracement levels, get a bounce, possibly even a retest, right? Come down, bounce, get a retest, and then push lower for our ABC down. So those are the two, patterns and waves really that I'm tracking on when it comes to SLV. The next thing we're going to look at is going to be the S&P 500. So let's take a look at SPY real quick. And SPY is holding the 50% retracement level very well. We had another green day today, up 0.58% on the day. And I've been calling for, pretty much a bounce in the SPY, right? So on TLT, it looked a lot more bearish and we're just heading down still in our wave one. We haven't really established any support. The S&P 500 right here, it could go either way, but it does look like we may have finished our wave one as we're trying to find support. And we have two gaps up to fill right here. They're pretty small. But if we keep holding this 50% retracement level, which is 379.15, then there's a strong chance that we could get our wave two bounce up, and it could take us up to about 397, okay, or 396 on the S&P 500. We don't have to go that high, okay, but these are just some areas for you to pay attention to, right? Now, our major retracement level to the downside that we need to break to push lower, right, and to get a stronger push to the downside is going to be 371.85. But overall, we're tracking pretty much the same thing as we've been tracking on TLT, right? We're tracking this 5-wave move to the downside. And again, your wave one, all right, is going to be a 5-wave move to the downside. And your wave two is going to be an ABC correction wave up. And then your wave three is going to be a 5-wave move to the downside, with wave four being an ABC up. And things are following pretty well, right? We actually got the MACD sell signal much earlier, and then TLT and many others, things that we're tracking. We got the MACD sell signal on December 5th in the S&P 500, and we've dropped a pretty significant amount, but we're really holding that 379.15. Now, one thing I want to mention is the more times you test a level of support or resistance, the weaker it's going to get, okay? Because these are all live auctions. So, you're seeing buyers step in here, buyer step in here, buyer step in here, buyer stepping in again. You have to realize that you're going to need new buyers present in the market each time, right? And so you have to ask yourself, how many times can people keep buying at that level before there's not buyers left at that level and there's new buyers at a lower level or either a higher level. So we're going to see if we can really hold this level. We've done a very good job at it pretty much the past entire week, the whole entire week. We've pretty much held 379.15 as a very strong support level and been able to close above there each time. So I would pay a lot of attention to that level. And if we continue to push higher, again, there's a possibility we could push higher up to 396. That wouldn't surprise me. And, right there is when I'm going to be looking for our wave two to complete. The wave two can complete anytime before that, or we could still be in the process of wave one and come back and try to, if we break this 379.15, the S&P 500 SPY ETF could come down to 371.85 and look to establish some support there before really getting our true B wave up or our wave two up. Because we've really just consolidated sideways right here. Kind of looks like a bear flag, right? Like if you saw how I just drew that, okay, we have our pole right here. Okay, and then here's our flag, and we're really just consolidating in this area. We're really range bound, looking for a breakout to the upside or a push to the downside. Okay, the next one we're going to look at is going to be the VIX, okay, the volatility index. Now, VIX, I've been saying that it's very one-sided and or one directional. Okay, so let me explain that a little bit better. But what I mean by that is it typically trades in the same direction for about a month or two, and then you see it gets a very strong breakout, right? So it trades to the downside here for about a month or two. You see it coming down, trading down, and then it gets this breakout and it goes one directional to the upside, right? But each time it does it, it has a strong breakout and then a very sharp pullback and then a push higher, right? And we can see that happening again here, one directional, we get the strong breakout, pullback, and then continue up higher. All right. And then over here, very one directional trading just down the entire time, breaks out, pulls back very sharply, and then continues up higher. Over here, we're seeing the same thing, trades down, one directional, breaks out, it pulls back, right? And the VIX is pulled back pretty sharply. And we're starting to see it rise again. So it's going to be really interesting. Can volatility in the market actually continue to drop and go lower, or are we going to repeat the pattern that we've been repeating where VIX breaks out, pulls back, and then it actually goes up and skyrockets? Now, one thing you can do to measure kind of like if there's going to be a big spike in volatility, I like to look at the skew index. What this does is this actually measures out of the money protection, right? Out of the money protection in the market versus the VIX is really just going to be tracking calls and puts, both in the money and out of the money on the S&P 500. The skew index measures specifically out of the money protection. So, for instance, if the S&P 500 is at 3,800 and people are buying 3,500 puts, then you're going to see a sharp increase in the skew index. And we're seeing skew has really just been on a downtrend, right? After this spike here, there was a significant spike about 2 Fridays ago on November 25th. So that's really about a month ago almost. And that following Friday, right? Look at the bottom how it says Friday down here. Okay. That following Friday, or that following Monday, there was a huge drop in the market and the S&P 500 actually gapped down, right? And we see that, the skew index has been dropping, SPY has been holding its major support level, and, the market's been trying to push a little bit higher. So it's really just helpful to take a look at it and see, okay, if skew is going down, most likely, the S&P 500 is kind of flat or a little bit bullish. And whenever you see big spikes in it, okay, then a lot of times that coincides with a sharp drop coming here shortly in the future, if not on that day. Now, some of the ways that I gauge market sentiment and really take a look at, if the market is risk on versus risk off is going to be SPY G versus SPY V. Now, this is the growth sector versus the value sector. Okay. And what we see here is that, we've been in a bearish channel pretty much this entire year. Okay. Now that's no surprise. If you're not familiar with how this works, SPY G is the growth sector of the S&P 500 and SPY V is the value sector of the S&P 500. If we zoom out to the past, okay, we can see that SPY G has actually been outperforming SPY G SPY G has been outperforming SPY V historically in the past, right? And there's no secret to that because that's going to be a bull market, right? That's when you're seeing growth stocks outperforming value stocks. Value stocks are very protective, very defensive. So you can see when the market is being defensive or when you can see when the market is being offensive, right? So here the market is on offensive. It's risk on, it's taking advantage of growth and, really, favoring growth over value. Now here, this is January, okay? This is the end of December of last year, and up until December this year, you can see that growth has been massively underperforming value. So what this does is this lets you know that, hey, the market is in full defense mode. It actually values value in itself more than it does growth right now. And you're seeing growth stocks plummet. You're seeing Kathy Wood's ARK fund, plummet, and that's no surprise. And a lot of the plays that have been doing very well have actually been some of the value plays, right? You look at a company like McDonald's; they recently hit all-time highs. Not too recent, but within the last quarter or two, they hit all-time highs. You have companies like Enphase, you have energy companies, right? Value companies. You have companies like Walmart hitting highs. And that's not going to be a surprise. And so really, once we see a breakout in this, that's going to let us know that the market is a little bit more risk on and that it's less defensive and it's more offensive, and that you're going to see growth stocks outperforming value stocks. Now, inside this bearish channel, we actually do have a falling wedge, which is again a bullish pattern. So if we can see a breakout of this, falling wedge right here, then that'll be a good indicator that, hey, maybe growth is about to go on a run, and maybe it's time to start looking at some growth stocks and rotate out of those value stocks. Now, another one that I really like to do is XLU/XBI, and the reason we do this is because this is the utility sector, XLU, versus XBI, which is the biotech sector. And what this is this is pretty much a good gauge of risk off versus risk on. Okay, when you see XLU outperforming XBI, that's a good indicator that, okay, hey, utilities are stronger and people are less risk on, they're risk off, because XLU is again risk off. XBI is very risk on, because pretty much biotech companies are pretty much all unprofitable. All right. And what you're doing is you're taking on massive amounts of debt and you're taking out massive loans, or you're diluting your share costs to your shareholders to raise money, because you're trying to raise money until you get some type of biotech product, whether it's a vaccine or whether it's something related to that. And then once you get that, then you have a profitable product, and then you can go ahead and make your money off of those profitable products. But until then, you're really researching and trying to develop and taking loans out or going into debt or diluting shareholders. So that's why it's a much more risk on sector. And so we can see XLU actually broke out here again. When this goes up, all right, XLU is the first one on here. So that means that utilities are outperforming the biotech sector. And we can see that we've had a breakout of this triangle pattern here. We had a break, retest, and we've pushed up higher. So it's basically just telling you that, hey, the market is still risk off right now. It's not really risk on. When you start to see this thing drop, that's when there's a potential that the market's going to be a lot more risk on. So pay attention to VIX, pay attention to XLU, XBI, pay attention to SKU, pay attention to SPY G versus SPY V. If you see those things dropping, right, then it's going to really tell you whether the market is risk on or risk off. And then, pay attention to everything else. Okay. We looked at TLT, we looked at HYG, we looked at TNX, we looked at SLV today. That was a new addition. And if you guys enjoyed this video, smash the like button and subscribe to the channel. As I mentioned before, I do viewer requests every week. So if you want to see an individual stock in a video and you want a dedicated video on an individual stock or something like that, all you have to do is comment down below and I'll be happy to make a video on it for you as soon as I can. And if you made it this far into the video, I think you might enjoy one of these next two videos as well. So make sure to click on those.